Hey folks, welcome back. If you owe back taxes to the Oklahoma Tax Commission and there's no realistic way you can ever pay the full amount, you might be wondering if there's a way to settle for less. The answer is, well, maybe. Oklahoma does have an offer in compromise program. Let's talk about how it works and whether it might apply to you. First, what is an offer in compromise? It's a formal agreement between you and the OTC where you pay less than the total amount owed, and the OTC accepts that reduced amount as full satisfaction of the debt. Once the offer is accepted and paid, the remaining balance is forgiven. The slate is wiped clean for that liability. That sounds great, so what's the catch? Well, the OTC doesn't accept offers just because you'd prefer to pay less. They accept them when they're convinced that the offer amount is the most that they can reasonably expect to collect from you. That means you have to demonstrate, with documentation, that your current financial situation and your future earning potential don't support full payment of the debt. What goes into the application? Well, you'll need to provide a complete financial picture. Income from all sources, monthly living expenses, bank account balances, real estate, vehicles, investments, retirement accounts, and any other assets. The OTC uses this information to calculate your reasonable collection potential. That's the number they believe they could collect from you through normal enforcement over time. Your offer needs to meet or exceed that number or they're going to reject it. Now, what factors does the OTC consider? Well, they look at your ability to pay in a lump sum. They look at your ability to pay over time through installments. They look at your asset equity, meaning what your property is worth minus what you owe on it. They also consider the age of the debt and the cost to the state of continued collection efforts. If it's going to cost the OTC more to chase the full amount than they'd ever recover, that weighs in favor of accepting a compromise. So who is a good candidate? Well, typically it's taxpayers who have limited income, minimal assets, significant debts, or health issues that affect their earning capacity. If your financial picture shows that the OTC would collect more from your offer than they would collect from years of enforced collection, you're a reasonable candidate. Who is not a good candidate? Well, if you have a high income, significant equity in your home, healthy retirement accounts, or other assets the OTC could reach through liens and levies, they're unlikely to accept less than a full payment. In those cases, a payment plan or other strategy might be the better path. How long does the process take? Well, it varies, but expect several months from submission to decision. The OTC takes time to verify your financial information and evaluate the offer. During this period, you need to stay current on all new tax obligations. And if you think an offer in compromise might be right for your situation, reach out to your tax advisor who can review your finances and give you an honest assessment of whether it's a viable strategy before you invest the time and effort in the application. I'll see you in the next one.